Hey, this is Dan Harris, and welcome to the Ironbird Podcast. On today's podcast, our guest is Joe Park. He's a managing partner of BizJetCPA. They're an accounting firm dedicated to private aviation. He's the guy to call if you don't want the IRS knocking on your door. On today's podcast, we talk about different tax structures, different liabilities, and how you can be successful in setting up your tax structure when you own an airplane. I hope you enjoy it. Joe, how did you get into the aviation space? How did you get into not only accounting, but aviation accounting and as an aviation CPA?
So my background is that I started as a CPA at a large public accounting firm, international. I started in just general practitioner doing partnerships, S corporations, a lot of private equity, a lot of kind of pharmaceutical companies, and preparing complex kind of partnership returns at the time. After about 5 years at the firm, it's a lot of long hours in the public accounting firm. It's challenging. You learn a lot, but sometimes it can be a grind. And
It's all about the billable hours, right?
It is.
Yep.
It is. And I was looking for something different at the time, and just by happenstance, like for a lot of people in aviation, somebody came up to me and said, "Hey, you should check out this opportunity." And talk to a guy named George Rice, who's the founder of BizJetCPA. And so the person that actually introduced me was my coach, my mentor at the my old firm. And his father-in-law just happened to know George. George was looking for a tax person. And he told me that it was something different and said that it was tax related strictly to the aviation industry, which, I didn't even know existed at the time. And most people don't know.
Yeah.
So, I had lunch with George. I actually attended the NBAA base event in Las Vegas back, I think it was in 2017. And
Which side note, if you compare Las Vegas to Orlando, I think Orlando's terrible.
I agree with you.
Okay.
Las Vegas is, to me, a much better place to be if you're going to throw a conference.
Yeah.
And, what I've heard is that the NBAA is going to be in Vegas for at least the next 4 years.
I hope so. The food sucks in Orlando.
Yeah,
so
I agree.
yeah.
And it's such a shorter
I know.
plane ride for
I know.
me.
Yeah, I know. So much. Yeah.
But yeah, so, had lunch with George, kind of got introduced to aviation tax, went to this NBAA. The thing about going to NBAA and the base event is that if you're not a part of the aviation industry, you don't know how large it is and how extensive it is.
Yeah.
And so, there was a room full of aviation attorneys, CPAs talking about, all sorts of regulatory and tax law that, went all over my head.
Yeah.
But I found it interesting and kind of started there. And now I'm the managing partner at BizJetCPA. And so,
How long have you been there?
I've been there almost 8 years now.
Wow.
Yeah. Our firm has grown exponentially since 2017. We've serviced over 300 to 500 tails doing some sort of work for them, whether it's income tax, sales or use tax, or property taxes. We work with public companies, private equity firms, high net worth individuals, entertainers, sports people, you name it. I mean, we work with them. We have clients internationally as well as domestically. So, it's a thriving practice. Just, the industry's been booming in the last couple of years. So, especially since COVID, the popularity for private aviation has just increased, and that means that there's just going to be a lot more people that need tax advice. So.
Do you want to break down the three major pillars of aviation tax, the property tax, sales use, and income?
Yeah. So generally, those are the three types of taxes that aircraft owners have to deal with. Now, it also depends on which state you live in, right? So certain states don't assess property taxes, for instance, or certain states don't assess sales or use tax. For instance, Montana doesn't have any sales or use tax, and I believe they don't have property tax either. So,
good state to own an airplane, then.
It is, but it's also hard to high net worth individuals have homes everywhere, and so they like to base their aircraft near their primary residence, and so oftentimes, you have to deal with multiple states in order to figure out the best strategy in order to be able to minimize their taxes. So
is that why airplane owners in the Seattle area quite often put their airplane in Oregon?
Yeah, so Oregon is a sales tax free state.
Yeah.
Washington, has a pretty complex sales and use tax law when it comes to aircraft.
Mm-hmm.
And so, a strategy in the past may have been to put the aircraft in Oregon to potentially avoid sales or use tax.
Yeah.
So, yeah.
Let's say if you're shopping for an airplane, you live in California, and you're going to buy a call it a $10 million Challenger 300. What should an airplane owner? What are the things that he probably needs to have, or he needs to talk to an aviation CPA about when he's looking to purchase that airplane to transact correctly, and to own and operate that airplane to limit his tax liability?
So if we back up just a second here, so let's just go back to those three taxes really quickly, and let me kind of give you kind of a summary for how you deal with each of those three taxes, and then we can talk about the California owner real quick. So in California, let's start with property taxes, right? So a property tax is like any other tax, like if you own a house. So you got to pay your property taxes to California every 6 months.
Yep.
Now for aircraft is also property that's taxable to California. And generally, what I like to say is that the estimate for property taxes is about 1% of the assessed value of the aircraft. And that's due annually. And there's really nothing you can do about that if the aircraft is here for the majority of time, for instance. And so California aircraft owners just have to deal with the property taxes. If the aircraft is here, 365 days of the year, you're going to own that 1% on the assessed value. And the assessed value is, you can think about it as almost like the fair market value of the aircraft. The next type of tax you're going to have to deal with in California is going to be sales or use tax. Now, sales or use tax is a one-time tax, just like if you were to go to the store, buy a pair of jeans, a computer.
It's at the purchase of the airplane.
At the purchase.
Yep.
Now in California, I mean, we're talking about a rate anywhere between, let's say 6 to 9.75%. And so, I mean,
That's significant.
It's significant on a, think about like a G650ER or something like that.
Yeah.
A $60 million aircraft. We're talking about, in the range of a $5 million tax bill. Now there are exemptions in California to be able to be exempt from those type of taxes. One being what's called the interstate and foreign commerce exemption.
I'm familiar with that because anytime we'd get a new airplane, it would be, and you can correct me if I'm wrong, we'd have to operate over 50% of the flights to outside of California.
That's right. So 50% of the flights have to be interstate and business flights.
Yep. And business.
And business flights. So essentially...
Not charter.
It could be charter. And so, if it's without getting into the details too much, but if it's third-party charter and if the flight is interstate, then potentially that could qualify as well.
Okay.
Now, the reason why the interstate commerce exemption works in California is that interstate commerce is protected under the Constitution. So, the U.S. government wants free-flowing business to happen between states, right?
Yep.
So that's why that exemption is available. Now, this also means that you have to take delivery in another state because the interstate commerce exemption is actually a use tax exemption, not a sales tax exemption. So, going back to the California owner, right? Let's say that the owner wants to hangar his aircraft in Van Nuys, right?
Yep.
You might want to take delivery or close out in Montana.
Well, no one takes delivery of an airplane in California, pretty much, right?
Well, you don't want to.
I've never seen one.
You don't want to. I wouldn't recommend it.
Yeah.
Even if it's a non-resident of California, you probably would want to take delivery in another state.
Yeah. And what are the popular states that you've seen take delivery?
Gosh, there's Montana's a good one because there's no sales tax there. Yeah. So it's very clear that if you close in Montana, there's not going to be any exposure to sales tax. Now, there's a lot of other states that have what's called a flyaway exemption. So a flyaway exemption would be you would close in that state, but the very next flight would have to be out of the state. And there's certain maintenance exemptions usually that come with those that flyaway exemption. For example, Kansas has a 10-day flyaway rule. Texas has a flyaway rule. There's a lot of states that have flyaway rules. Another good place to close would be the Carolinas. So certain states say, hey, look, we're going to assess sales tax, but we're going to cap that sales tax. So if you close in South Carolina, on whatever type of aircraft you're closing on, the maximum is something like $500.
Oh, okay.
So
Yeah.
I can't remember if that's exactly the number, but it's a very nominal amount.
Yep.
And so pay that tax, and then now your sales tax transaction is done.
Yep.
And on the flip side, you have to deal with use tax. So use tax basically means where you're going to house the aircraft, where the aircraft is going to be habitually situated. And you have to deal with that state's jurisdiction's use tax law. And so that's why if you're going to house the aircraft in California, you'd want to try to go for the interstate and foreign commerce exemption in order to be exempt from use tax.
Got it.
California also offers something called the common carriage exemption, which is a 12-month test over which you need over 50% charter use. And, there's certain rules about what counts and what doesn't. But point being is that California offers several different ways to be exempt from sales and use tax on the aircraft. And there's all sorts of different rules for other states. So you just have to look into the specific rules for each state where the aircraft is going to spend a significant amount of time.
For the two California strategies, do you use one or the other, or is there one that's better than the other?
That really depends, Dan, because
maybe you've got a 91 operation, you do zero charter, right?
So you wouldn't have the option for the 12-month test. Now, let's say that a lot of people do 91 and 135, for instance. So a good kind of rule of thumb would be to go for the 6-month test and then potentially fall back on the 12-month test. If for some reason you weren't able to accomplish the 6-month test. So you get 2 bites at the apple.
Would that completely waive your use tax?
For the aircraft owner, it would in California.
Oh,
yes.
Wow. Okay.
California is a unique state in that the sales or use tax liability, if the aircraft owner is exempt, it actually just, as long as the aircraft owner owns that aircraft is exempt from sales or use tax. So in a lot of other states, that doesn't happen.
What's the potential liability if they don't hit that?
Like I said, 9% of whatever the aircraft purchase price is.
Yikes.
Yep.
And then what do airplane owners have to look at when they're looking at income tax?
So income tax is is probably the most complicated of the 3 taxes, right? So number one, you have to talk to your general CPA, your aviation CPA to figure out whether that aircraft is a justifiable business expense to your business, right? So that's not an easy question to answer because, it doesn't matter how much money you have. If you don't have a business to connect that aircraft to, you can't really write it off, right? Just like a car, right? I mean, you got to title your car to your S corporation business or whatever kind of entity that that operates, right? So it's the same kind of logic for the aircraft, right? So assuming that you have, a widget company, right, that can own the aircraft, normally you'd want to title the aircraft to that widget company. Yep. Now you're flying on behalf of the widget company's business, for your international clients. Maybe you have factories nationwide, something like that. The aircraft is now deductible to the extent that the passengers on board are business passengers, right? Yep. So sometimes people get that mixed up as well because, the principal's on board, the CEO, whoever is flying to New York for a meeting, he takes his friends with him or his family with them. They're going to go see a ball game or something like that, right? Yep. The IRS would say, hey, look, you can only take the deduction up to the extent of the business passengers. That's not going to be a fully deductible trip. So you got to watch out there. And one of the most significant factors is structuring. Where is the aircraft going to be held? Who's going to hold title to the aircraft? And that's probably the most significant question you have to answer from the income tax perspective. Now, where it gets a lot more complicated is that there's this connection or this sometimes this convergence between FAA regulations and IRS regulations that don't always kind of work out. And so sometimes what the FAA needs creates tax complexities from the IRS side, or what, if the aircraft owner wants, deductions, and he wants reimbursement, or there's going to be this clash between these two different government agencies sometimes.
Is that when you're looking at, as an airplane owner, flying for yourself, 91 versus 135?
Well, so the biggest difference between 91 and 135 is reimbursement, when it comes to so often the aircraft owner wants to charge people or charges other entities that use the aircraft for the use of the aircraft.
Yeah.
Now under 91, generally reimbursement isn't allowed because it's non-commercial use. But 135 is commercial use, and therefore you can definitely charge other entities or other people for use of the aircraft. But as you know, there's all sorts of restrictions when it comes to 135, right? Crew duty
Flight
time, and if this guy wants to use the aircraft for international, then all of a sudden it takes
your permit. Yeah, your permit time's a lot longer. Yeah,
right. The 135 use can also create what's called a passive activity if you allow third parties to use your aircraft. And so I don't want to dive into passive activities, but generally it's almost as if you're renting your aircraft out to a charter management company.
Yep.
And that loss that's generated, if there's a loss that's generated, you wouldn't be able to use that against your business income. And so people often can miss that. And upon audit, you can turn into a not so great result there.
Yeah. Have you seen that? Has someone come to you with an airplane that maybe is about to go through an audit or going through an audit? You've seen that happen?
Not specifically, but it's interesting you bring up audits because the IRS released, I think it was back in February, a letter that stated that they were going to increase audits on aircraft.
Yep.
And shortly thereafter, there was actually an internal letter written by a few senators to the Department of Treasury, asking them to change tax law related to the fringe benefit as well as the deductible use of the aircraft. And so anecdotally, I've been getting a lot more calls these days from people who are being audited on aircraft.
So you're seeing those audits actually increase?
I am.
Oh, interesting.
I am. Now, I don't know whether or not that's actually happening. This is just, phone calls that I'm getting, but the IRS is focusing on basically, hey, let us know who was on the aircraft. What was the business purpose? They're really looking to see whether or not these calculations are being done correctly by the aircraft owner.
So a lot of airplane owners are probably just taking, anytime they fly, at least how I would do it, would be anytime I fly, make sure I have some sort of business meeting or something. And then that way, every time I fly or majority of the time I fly, I'm equating that to business. And now the IRS is basically saying, show me the backup to it.
Show me the proof. So you have, so when it comes to aircraft, they're considered what's called listed property for IRS purposes. And what listed property is it's property that's subject to abuse.
Yep.
And so, within the Treasury regulations, the law, basically, it says the taxpayer has to substantiate all these business use, right? So if you don't have the substantiation, even if you use the aircraft 100%, the IRS has the full authority to reverse those business deductions. Wow. And so, you have to set up a process whereby you're collecting all this documentation concurrently.
It's interesting because a lot of the times when we were operating airplanes, we would near tax time say, a big rush, get me all the passengers, get me all the details.
Right.
Instead of, I've seen the really well operated flight departments and airplanes, it's a monthly capture and reporting. Right. And I think, and maybe that's one of the things when you look at aircraft management companies or even your own internal flight departments, that reporting, I think when some of the smaller aircraft management companies have a hard time with the really quality reporting. And I bet there's probably even larger ones that have it, and there's probably smaller flight departments or bigger flight departments that don't report really well. But I think when you're looking at choosing an aircraft management company, that's probably one thing that I bet not a lot of people ask about is show me your reporting. How does it tie in to, my tax liabilities, right? Because I'm assuming you've seen the full spectrum, as probably I have, of reporting, right? And it can be very bad with regards to just like poor PDF or Word documents or things like that, right?
Yeah, I mean the management reports and the logistical information that the management companies retain or maintain for the aircraft owner, or essentially where the aircraft owner comes and puts together their financial statements.
Yep.
Right. And we use those financial statements not to take the deductions to calculate this disallowance for the entertainment use. It's basically the foundation for preparing the tax return for the aircraft.
Yeah.
The flight logs are one of the first things that the IRS is going to ask for upon audit, or passenger manifest, right? So you got to make sure all of that, lines up correctly with all your records. Otherwise, questions are going to be asked, and all of a sudden you have an IRS agent who's skeptical about your records, right? So yeah, I mean, it's accuracy is tantamount to surviving an audit.
Yeah. Yeah. So you've seen it where an IRS agent asks for the information when you're easily able to provide that information with the corresponding reasons. That really lowers your risk of maybe not audit, but even in an audit of them digging deeper potentially.
Well, I mean, if you think about it, right? So the IRS is going to send you, a list of items they want, informational items. And if you're able to produce those items relatively quickly and say, hey, here's all my documentation, here's my flight logs, the IRS agent is they'll realize that, hey, there's no point for us to look into this more, right? And so if your records are clean, and I've actually gone through a couple of audits the past couple of years where, what they were looking at was bonus depreciation on I think it was a Global 7500 G650ER. And those clients kept pristine records, and it ended up being an easy audit with no adjustment, right? And everything lined up. So if you're able to put that process in place, then you don't have to sweat an aircraft audit.
Yep.
I would also say that you shouldn't be aggressive in your passenger classifications. Right?
Well, that's because you're an accountant.
Well, it's one of the first things that the IRS is going to look at is to see why your family's traveling, why your related parties are traveling, and to take deductions for your related family, unless it's justifiable business. Is going to be it's a red flag for the IRS to see.
For sure, yeah.
Easy one. So.
But any business owner is going to want to push that to the maximum, right?
Yeah, and I would recommend they don't do that.
Of course. That's your job, right? To do that. If I'm an airplane owner, how should an airplane owner work with an aviation CPA to build that tax strategy? Like what are good, what's a good process for them as they're looking to purchase, let's say, their first airplane?
Well, it's always best to talk to an aviation CPA pre-acquisition.
Yep.
Maybe 3-6 when you first start thinking about buying one, right?
Yep.
So,
because I've seen what I've seen is a person has maybe an exit of a company. They have a big payday,
right?
In airplanes sometimes on that bucket list. It's like, great, I exited for a couple $100 million. I want to go buy a $20 million airplane because I made it. Like, what do you usually see? Like you said, initial conversation with an aviation CPA, which quite often I see a lot of that. I don't see that often early as I think it probably should be, right?
I agree with you.
People usually come to you, hey, I'm about to buy this airplane, right?
Yes. So, or post acquisition, right? Yeah. And then you got to go clean up everything. Maybe the loan documents, the financing isn't done right, and that takes a lot of cleanup. But the specific kind of hypothetical you bring up about the public company CEO cashing out, that's a challenging circumstance, right? Because he doesn't have that widget company anymore, and so that's the exact type of person that needs to have this conversation way before you sign an LOI, right? it may be that he's not going to get any deductions
Really?
for the aircraft, right?
Well, he's got a big tax bill that's about to come up, right? And you think like, all right, I've got this big tax bill. How can I reduce that? Can I go buy an airplane to reduce that?
Well, the answer is going to be it depends.
Yeah.
But again, if you win the lottery and you buy an aircraft, you can't just write off the aircraft. You need a business to attach it to, right? So it's the same concept. And I do get those calls where a public company CEO has a 9-figure payout.
Yep.
And is looking to write off an aircraft, but because he doesn't have a business or there's nothing to attach the aircraft to,
Yep.
he's not going to be able to write it off, right? And so it's hard sometimes for high net worth individuals to swallow, but the law is the law, right?
Yeah, because they're used to buying a piece of real estate, right?
Right.
And taking that real estate deduction somehow.
Yeah, so real estate is totally different section of the tax law, and there's all sorts of different rules about that. So, real estate still allows what's called 1031 exchanges, and so
but they used to allow 1031s in aviation, right?
They did until 2017.
Yeah.
So the Tax Cuts and Jobs Act actually got rid of the 1031 exchange, but it wasn't all bad news because we had 100% bonus depreciation at the time. So, as long as you acquired and sold an aircraft within the same tax year, it was almost as if you were doing a 1031 exchange on aircraft at the time.
So what are the strategies now around that depreciation? What have you seen work really well?
Well, again, structuring is going to be key. You got to maintain your business use, right? And so, you using the aircraft for 50% qualifying business use every year. That's based on passenger by passenger as well. That's going to be key to maintain the bonus depreciation you claimed in the prior year. Remember that aircraft audits are increasing, so documentation is important. I tend not to be as aggressive, or I give my clients conservative recommendations when it comes to aircraft.
As you should, yeah.
It's always something that's going to be looked at.
Your goal is to not be audited, right? Yeah.
And to me, if you're getting write-offs on aircraft via depreciation or some sort of business use, justified business use, then you're already in a win situation.
Yeah.
And therefore, enjoy your aircraft. There's going to be a carve out, but it's the aircraft is, you shouldn't be aggressive with it from a tax perspective.
Yeah. Can you take, or have people taken that asset and say, all right, well, I'm going to charter it. That's a business use. Would I need to start my own charter company to create that, or can I create a charter website that drives leads? Like, is that something that I could do to help with that?
Well, I think the easier option would be to call somebody to charter out your aircraft, enter into a charter management agreement with them. Now, I've talked to countless people that want to go out and buy their 135 certificate,
just for tax purposes.
Yeah, and they're talking about starting a 135 charter company, but it's not practical. It never happens.
I would suggest against it as well.
Yes,
starting and running a 135 is not a fun.
It's complicated.
Yep.
You have no idea how complicated it is. Yep. There's all sorts of FAA regulations, so that I don't know anything about. Talk to an aviation attorney. I mean, it's extremely competitive.
Yeah.
It's not easy to succeed under a 135 operation.
And the FAA requirements, the staffing requirements, your chief pilot, your director of operations, what that requires is difficult. And when you lose one of that pieces, it's difficult to run. And I know at one point that was a popular strategy. I think, maybe 10 or 15 years ago, where I saw a lot of. They'd have these single airplane 135s with a marketing agreement to a larger 135 company. And I just think that I don't know if it's gone out of favor. That strategy just hasn't worked as well, because I'm not seeing that very much at all over the last 10 years. Well, probably because it's also too difficult.
Yeah, I mean, it's extremely difficult. Yeah. What I would tell my aircraft owners is, if you want to charter out your aircraft, go find a good charter management company.
Yep.
Enter into a charter agreement, and have them take care of it.
Yeah.
That is the most practical way to offset. Bring in some extra money from an economics perspective.
Yep.
It is business use, and
So you can tie that business use as long as you've got a charter company chartering it. You can tie that business use. You can get that depreciation.
You can, but again, the charter of the aircraft represents a rental activity, so it's a different activity than the business use of the aircraft, and it's treated differently. So you have to be careful because you could run into a roadblock, meaning you wouldn't be able to use losses generated from your charter activity against your business income.
Okay.
So if the aircraft owner has, let's say he owns, a bunch of apartment buildings, renting them out, and he has a bunch of rental income, then potentially he could use that.
Yep.
And there's all sorts of rules when it comes to this 469 passive activity that it's complicated. But potentially he could use those charter losses. It depends.
Okay. That's good to know. So when you're thinking of that tax strategy, it's an early conversation with an aviation CPA, and this probably kind of parlays into another topic of using an aviation CPA versus just your main CPA or in-house CPA, right?
Well, so generally,
I'm looking to buy an airplane, right?
Yeah.
I have a conversation with my CPA, but what would an aviation CPA kind of bring to that conversation?
Well, he's going to bring to the conversation, the aviation expertise. So the tax knowledge on aviation.
Yep.
And there's special rules when it comes to aviation that a general CPA likely won't know.
Yep.
And so what normally happens for myself is I work with their general CPA to have discussions around, structuring, where to title the aircraft, how, what the business use of the aircraft is going to be. Discuss with them the entertainment use of the aircraft. Discuss with them the fringe benefit for the aircraft. So essentially, the aviation CPA becomes part of the team.
Yep.
Right. And so I work with other large public accounting firms and give them consulting reports and make sure that the aircraft is being reported correctly. And my expertise is in aviation. I'm not a real estate guy.
Yep.
I'm not a private equity guy. So I'm not in the position to offer expert advice on in those fields. So I limit my formal kind of recommendations and business knowledge towards aviation.
When they go through that purchase or when they're working through that purchase, how do you work? That's how you work with their CPA, but how often are you working with their aviation attorney?
Often.
Yeah.
Often. So there has to be cooperation between the aviation attorney and aviation CPA because number one, the aircraft has to be operated legally under the FAA rules. And that may involve setting up what's called a dry lease.
Yep.
And that's fine from an FAA perspective, but on the flip side, that can create issues from an IRS perspective.
It goes back to kind of that FAA versus IRS kind of, yeah.
And on the other side of it, the aviation attorney would say, hey, let's just title this aircraft in an LLC owned by the aircraft owner individually. Well, that can create issues from a deductibility perspective, potentially. So we have to work hand in hand to figure out what the aircraft owner's goals are. And so he's going to have tax deductible goals, right? This is what I want bonus. I want to deduct this. And then the aviation attorney is going to also want to talk about limiting liability.
Yep.
Right. And so oftentimes there's a seesaw effect between liability and tax deductions. So if you want less liability, then you're going to have a harder time getting deductions. If you want more deductions, you're going to have to bear more liability. So it's this balancing act that aircraft owners have to understand that you oftentimes you're not going to get everything that you want. You have to pick and choose.
Where do you see, where have you seen a kind of a good balance of that?
Well, that's a little bit different for each person, right?
Yeah.
Meaning your risk profile. What's your risk profile?
Maybe for more of like the smaller private business owners versus some of the larger ones, because I'm assuming the larger businesses want less liability, right?
That's 100% true. Meaning, think about a public company, right?
Yeah.
So I wouldn't say every public company, but there's a lot of public companies that don't want to own aircraft, don't want to disclose, on their proxy statement, the personal use of the aircraft, et cetera.
And that's why they add, they still do own these airplanes. They just figure out how to add additional layers, right? To kind of get a good arm's length from the airplane.
Yes, exactly.
There's also some good, interesting programs. The guys at Four Corners have an interesting program where, like, basically they buy back your airplane from you and then sell it back to you at an hourly rate. It's really interesting to give those Fortune 500 companies normally that, so they basically don't have to report it.
I'm not familiar with that program, but it's public companies tend to shy away.
We'll give Brian Proctor a tag on it.
They tend to shy away from owning aircraft directly.
Yeah.
If it's a private company and they're the aircraft owner is the 100% shareholder, 100% partner where he has full control, then it's you see that aircraft are owned directly by those operating entities so that they can take the depreciation and the write-off. So he also has this say about whether or not his company has liability over the flights, right? Because if they're flying 91, they're going to have liability over those flights, the operating company. So
I guess that's another thing of 91 versus 135.
Okay, that's
right?
a big one, yeah.
At 135, you've got less liability, but there's potentially more tax. Well, there's definitely more operational restrictions,
and there could be some tax restrictions and maybe less tax benefits as well. So
we were talking about monthly management reports. From a CPA standpoint, what are you, when you get monthly management reports, what are some red flags or things that you're looking for that you want to make sure that, hey, this doesn't show up or we're seeing some issues here on these reports?
So we always do kind of a sanity test to make sure that, the costs line up to what the industry's expectations are.
Hey, you flew 50 hours. It should be somewhere around here, right?
Right.
Yeah.
We'll take a look at, the direct operating expenses, the fixed operating expenses on an hourly basis to make sure it's somewhere in the ballpark.
Yeah.
If they're getting a charter rate, make sure that the revenue that they're getting is what we expect.
Yeah.
But I mean, in terms of, a deep audit, that's not where our expertise is.
Yep. That's where you need a really good aviation consulting firm to help you with those, right?
We know what the industry trends are, but we don't know exactly what's going on. Yeah. So, we're CPAs, we're not mechanics, we're not brokers, and we don't know exactly what's going on in the market. So
yeah. But as long as so you're looking more trends.
Yes.
So you're making sure, hey, I own a Challenger 300. Here's what we've seen, for our other Challenger 300s on cost, on charter payback, owner, things like that. And if you're seeing this trend higher, maybe you flag it and then you can kind of dig into it.
We'll question it. We'll ask the client. If the client comes back and they understand or give us a reason, a justifiable reason, then that's fine.
Yeah, no, I'm paying my pilots. Right. I've got these 2 or 3 pilots. I'm paying them a premium. That's why we're seeing higher costs. Exactly.
I mean, one of the big areas is maintenance, right? So we'll see. Okay, it was I don't know, say $300,000 last year, and then this year, wow, we're looking at $800,000, and so we'll scan the maintenance expenses first of all for improvements to see whether or not that should be capitalized and depreciated. But we'll ask the client and make sure the client that, hey, do these maintenance expenses make sense? Now, again, we're not experts in what goes on in the maintenance reports or the logs, but that's where a large variance is often seen is in the maintenance expenses.
I think that's always the biggest question mark, and it's hard to plan outside of some of the major maintenance inspections. You give a decent idea what those will be. But I think that's always the biggest question mark in airplane ownership is what is the maintenance truly going to cost? And no one truly knows what exactly it's going to be because you just don't know if a windshield breaks or I think that's one of the biggest frustrations for me as well as when we're looking at building a budget for an airplane and and I talked about this before, but getting cost estimates from different airplane operators on what that maintenance can be. There's such a range, and you've probably seen this before in when you're you've seen budgets before on airplanes.
Right.
Why can one airplane cost the estimates be so much different than other airplane operators? So they're all performing the same maintenance.
Right.
It all should be estimated the same. The maintenance cost, the labor isn't hugely different in all these different locations.
Yeah. You know, I've seen a lot of budgets.
Why are they so different?
I don't know. I don't know. But yeah, I mean, I run a lot of cash flow analyses for potential aircraft owners, right? So I have to work off the budgets that I'm given, meaning, you know, I'm not the expert in creating this budget. So it would be nice if, you know, it'd be nice to have a standard out there to figure out, you know, for this type of aircraft, this is the type of budget we should be looking at.
Well, I know there's a few. What's the main one that people tend to use? The budgeting.
Aircraft cost calculator.
Aircraft. No, not that. That's actually a pretty decent one. There's another one.
Conklin Dedecker?
Conklin. Yeah, Conklin.
Okay.
But I mean, everyone uses Conklin. But I some of the other pieces of technology that they're not there yet. But I know MySky. You know, I would love to be able to do an industry-wide, everyone pool their data. We can create accurate estimates of what it costs to operate this Challenger 300. And here's where you are on the life cycle of the airplane. Here's other airplanes that have run through it. Here's their average cost, and actually provide that to you based on real data. Here's every Solaris, every Clay Lacy airplane, every Jet Aviation, every EJM airplane that's been through this cycle before. Right. Here's the airplane that's 2 years older than your airplane with similar hours, and here's what their costs were over the last 2 years for the 2 years you're going into. You think I could get all those companies to agree to put all that data in one place so clients would actually have real world data?
I wish you good luck on that.
I know.
But you know, cash flow forecasts and figuring out what the aircraft costs, the accuracy of that is based on the assumptions and the inputs.
Yeah.
So you know, if it's garbage in, it's garbage out, right?
Yeah.
So.
Yeah, I know. That's a next project for mine is how do I collect and organize that true data. And I'm hoping if I can give airplane operators maybe some sort of piece of technology and they give me data back, maybe we can, and if I can do that for some of the large operators, maybe I can give true budgeting,
right, and
true benchmarking.
I think that'd be valuable.
Yeah.
You know, because aircraft are expensive.
Yeah.
You know, that they take a lot of money to operate yearly. I see this day in, day out.
Yeah.
And so, you know, for an aircraft owner to make that decision, it's a significant decision.
How many times have you seen airplane owners say, "Hey, they told me it was going to cost, you know, $800,000 and it cost $1.5 million."
Right.
Too often, right?
I mean, you know, I get guys that buy an aircraft and next year they're selling it because they say this is too expensive.
Yeah. Yeah. It's like, well, like an airplane owner should know, or at least have a good idea of what that airplane should be over a clear 5 year. Over 5 years, it should, you know, you have a higher maintenance year, you have a lower year. It shouldn't be, that should never happen out of someone buying an airplane and then selling it a year later because they had the wrong expectations.
Yeah.
Outside of an aircraft broker or an aircraft operator basically lying to you. Yeah, you have the one-off where you buy an airplane, something unfortunate happens, right? Or it has a really bad turn. But outside of that, if an airplane broker is being honest and an airplane management company is providing you honest budgets,
right,
then you should go into an airplane really truly understanding your costs, right?
I would hope so.
Yeah.
I would hope so.
But that doesn't happen all the time.
Well, you know, it's good client service to give them, you know, be candid with them.
Yeah.
And so, yeah, I mean, aircraft, you're never going to be cash flow positive with an aircraft, right? Rarely, very rarely. So, you know, it's very expensive. It's a tool from a tax perspective to allow you to generate more business, potentially get some write-offs. But yeah, I mean, you know, you got to look at the economics overall.
Do you think there's a structure where you can buy a, you know, $2 to $4 million asset at the near end of its usage to say you've got a, you know, that $5 million tax bill? Can you buy a $2 to $4 million airplane, basically charter it 100% of the time, and after 5 years, theoretically maybe part it out to really help. Like, hey, I've got this $5 million tax bill. Let me go take this $5 million asset, or it's going to cost you to operate. So $3-4 million, Lear 60 or whatever you want to say. Is there a strategy to help on that lower end of the your tax liability to run this airplane not in basically to the end of its life?
To parts.
Yeah. And basically do that every 3 years?
It probably doesn't make sense from a cash flow perspective. If you were to buy the aircraft and use it for business, let's say 99% of the time, and in this market, let's say it held its value, then potentially.
Yeah. Okay.
But to run it into the ground and basically take a loss on it, it probably wouldn't be cash flow. It wouldn't make sense from an economics perspective.
Okay. Yeah, I'm interested in what are those models that and it's probably ever changing, but and I need more data to look at it. But what's the airplane model? What's the purchase price with the airplane model, with the operating cost, with the charter return?
Right.
What's the most efficient model? And again, maybe when I get all this data from the aircraft management companies, I can run it through some good AI.
I'd be interested to
right?
see what the results are.
Yeah.
From what I've been told, right, the break-even point from charter is about, what, 500 hours-ish a year? And
it changes, yeah. It's all based on the operating cost, the maintenance cost,
fuel cost,
fuel
all that kind of
cost.
stuff, yeah.
And the thing is, it's so sensitive because you can lose a pilot, and now you can't fly for a month or two,
Right.
or you're flying 40 hours and now you can only fly 30 because your third pilot is now gone.
Or you hit just some unforeseen maintenance event, and all of a sudden that wipes out your whole cash flow for the year.
Yeah. It's high risk for sure. It's definitely high risk. All right, what do you see going forward from the current administration and some of the things that they've been saying? I know we talked about some more potential audits. Anything else that airplane owners should be thinking about the current administration and what they're saying, and maybe what we may see for future tax liabilities and changes to the structures?
Well, that's hard for me to say, but there's a bill in the Senate that was supposed to retroactively apply bonus depreciation to 2023 and also extend 100% bonus to 24 and 25. It passed overwhelmingly in the House, but it's now pretty much dead in the Senate, from what I hear.
That's where we need MBAA to do some more work, right? That's what we're paying these MBAA bills.
We are, and I'm on the tax committee, the
Yeah.
MBAA tax committee, and we're trying our best. There's people up in all the hearings.
Yeah.
But 2024 is an election year.
Yeah.
And it's not going to be easy to get tax bills passed. So we're not my thought is that it's
no real changes.
Nothing before November.
Yeah.
Right? So if anything does change, it's going to have to be after November.
So what does that mean with the current depreciation laws?
So right now, depreciation, I believe, is 60% this year, and then it goes down to 40%, 20%, and then 0. So it's supposed to go away 2027. Somewhere around there.
Yeah.
Now, depreciation has been around whether you're red or blue. So it's a relatively
and you can always get to that 100 number. It's just how fast, right?
Exactly. And so it's been a relatively popular tax item. I think Obama put a 100% bonus back in 2011, and we've had 50% bonus for a while now.
It's good for political donors, right?
It is.
If you're a large political donor, there's a good chance you're a private aviation user, and that's a bone that politicians can toss.
It's not
right?
just limited to aviation if you really think about it, right? So any capital, Caterpillar equipment, anything like that, that's all going to be a write-off via bonus depreciation. So I don't know what's going to happen. Hopefully, there's going to be some sort of bonus depreciation to be extended after November. it's really hard for me to say where it's going to go though.
Yeah. Is there any difference? Do you view like a fractional with a FlexJet or a NetJets from a tax standpoint any different than you would view a whole airplane purchase?
Generally, no. Fractionals, it's almost, let's say you own an eighth share. It's as if you own the whole aircraft in the eyes of the IRS.
Yep, that's just a lower cost.
Yeah, it's just a lower cost. Now, from a sales tax and a property tax perspective, generally, the fractional companies deal with that as opposed to the fractional owner. Not always, but generally.
Okay. All right. So it ends up being a little bit easier. Can you not take as much advantage of that? If you bought a $4 million fraction versus a $4 million whole airplane asset yourself?
From the tax side of things, it's exactly the same.
Okay.
From the operational side, it's the whole aircraft's a lot more complicated, obviously.
Just another thing, make fractionals a little bit easier for everything else, right?
Yep. I mean, right. You're getting a monthly charge and you're paying your direct, right? And 2 invoices, right? You don't have to deal with anything else as opposed to all the sorts of other stuff you got to deal with the full aircraft ownership.
Yeah. Yeah. Awesome. If airplane owners or anyone else wants to get in contact with you, what's or wants to learn more about BizJet CPA, what's the best way to do that?
So our website is under construction right now. You could call us 714-540-6400. You can email me at jpark, JPARK at BizJetCPA.com. Happy to answer any questions related to aircraft, any general questions you have.
But you want people to email you before they actually buy the asset.
Oh yeah. I mean, yeah. If you're thinking about buying an aircraft, give me a call.
Yeah.
And we can start the conversation there. I'm happy to have an intro conversation, give a general introduction to anybody who's interested. So,
yeah, awesome. Joe, really appreciate it. Thanks so much.
No, appreciate it.
Thanks for listening to the Ironbird Podcast. I hope you enjoyed it. I know taxes aren't always the most engaging thing, but I really enjoyed my time with Joe. You can always find him at BizJetCPA.com. Or you can always email us at fly@flyironbird.com. We'll be sure to connect you. Thanks again.